In this video, I'm going to go over my top stocks for the month of May 2021. I've spent the last month analyzing hundreds of companies, and this is my list of stocks that I think are the best buys right now. Be sure to watch all the way through to get my full analysis of each of these companies. I'll go over some key numbers, recent news, and why I expect them to grow, and why they need to be a part of your portfolio right now.
Let's go make a killing.
But before we begin, I want to say a huge thank you to everybody who smashes the like button and comments for the YouTube algorithm. Doing that helps out our channel tremendously. Even something as small as destroying the like button helps the YouTube algorithm recommend these videos to an even bigger audience. So for that, I really appreciate it, so thank you very much. As a disclaimer, I'm not a financial advisor and this is not financial advice. With that disclaimer out of the way, your trust is most important to me, and we are here to grow our wealth and make money, not lose it. So I would not be recommending these stocks if I didn't believe in them myself, and I wasn't able to recommend them to my brother or sister with a clear conscience.
So your family is rich?
We're comfortable.
That is exactly what a super rich person would say.
Alright, let's get right into it. Let's take a look at Amazon. Ticker symbol AMZN. Amazon is the largest e-commerce marketplace in the world. Amazon has what it calls Amazon Store, which includes Amazon.com, its e-commerce marketplace, Amazon Prime, Amazon Music, and its physical stores, including Amazon Go Grocery, Amazon Fresh, Amazon 4-Star, Amazon Books, and Whole Foods Market, among others. Amazon also has a huge Prime subscription business, which grew from 25 million members in 2013 all the way up to 150 million in 2021. Amazon also offers cloud computing services through its Amazon Web Services, which is the most comprehensive and widely adopted cloud computing platform in the world. They offer products for compute, storage, databases, analytics, networking, mobile, IoT, security, enterprise, and a whole suite of artificial intelligence products. Amazon Web Services is a cash cow, and it is a very high margin business for Amazon. Amazon also has a thriving devices and services business with products like Echo, Fire Tablet, Kindle, Fire TV, Ring doorbells, Blink security cameras, Eero for Wi-Fi, the Amazon Halo Band for individual health and wellness, and Project Kuiper, which provides high-speed broadband connectivity to underserved communities around the world using satellites. Amazon also has a thriving delivery and logistics business, and they offer Amazon FBA, or Fulfillment by Amazon, which brings Amazon's operations, logistics, and customer service excellence to merchants as a service. They also have Amazon Air for free fast delivery, Amazon Last Mile Delivery for getting orders from delivery stations to homes, businesses, and Amazon lockers, Amazon Prime Air, which uses drones and other unmanned aerial vehicles for safely getting packages to customers in 30 minutes or less, and high-tech products like Amazon Scout, which includes robots for fully electric delivery systems for getting packages safely to customers. Amazon also has an entertainment division, which includes products like Prime Video, Amazon Originals and Amazon Studios, Amazon Music, Audible for audiobooks, Twitch, which is a huge global community of streamers and other people sharing their experiences live, and Prime Gaming. If all of this wasn't enough, Amazon also owns several other brands like Goodreads, IMDb, Box Office Mojo, DP Review, Zappos for shoes, Fabric, ACX for audiobooks, Woot.com, ShopBop, 6pm.com, and it's also getting into healthcare with PillPack and payments with its credit cards and business cards and rewards cards. Overall, Amazon is operating in a ton of different markets. It's getting into new markets constantly, and it's a force to reckon with. Amazon's current market cap is $1.75 trillion. So it's one of the largest companies out there. Its current price is sitting at $3,467. And if we look at the historical prices, the 52-week low was $2,256 and the 52-week high was $3,554. And Amazon's current price is very close to the 52-week high. Amazon just released its earnings report and it beat expectations on all fronts. If we look at Amazon's dividends, they currently do not offer a dividend. Their trailing PE is 65.91. Their forward PE is 65.36. Their price earnings growth ratio for 5 years is 1.59. Their price to sales is 4.23 and price to book is 16.93. They have a 6.42% profit margin, and their return on assets is 6.84%. If we look at the financials, the total revenue has only been increasing from one year to the next. In the most recent fiscal year, the revenue was $386 billion, which was a year-over-year increase of 37%. The operating income has also been steadily increasing. In the most recent fiscal year of 2020, it was $22.9 billion, and the net income has also been increasing steadily, and it was $21.32 billion, which was an 83% year-over-year increase. Amazon also has a strong balance sheet. Its total assets have been steadily increasing. In the most recent fiscal year, they were $321 billion. Total liabilities have also been increasing, but the debt-to-asset ratio has been going down from one year to the next, which is the sign of a very healthy business. They also have great operating cash flow, as you can see here, $66 billion in operating cash flow in the most recent year. If we look at the analyst ratings, based on 47 analyst ratings, Amazon is a buy, with 38% recommending it as a strong buy, 57% recommending it as a buy, and 4% recommending it as a hold. There's no analyst ratings or underperform and sell. The average analyst price target is $3,993, which is a good premium over the current price of $3,400. And I believe that in the next 2 to 5 years, Amazon could easily hit $4,000 or even $5,000. Let's talk about Microsoft. It has different lines of business, from software to cloud to devices and consumer electronics to games to search to professional networking with LinkedIn. So on the software side, Microsoft has Office and Windows and Microsoft Teams. On the cloud side of things, which is a core part of Microsoft's business portfolio, and that part of the business is growing really fast, we have Azure. On the devices side of things, we have Surface and Xbox and PCs, and HoloLens for extended reality. And then Microsoft also has several other lines of business, like services and gaming and Bing for search and LinkedIn. If you look at Microsoft's 10K filing from 2020, you'll see that its business is extremely diversified across its server products and cloud business, its Office suite of products, Windows, and other businesses like gaming, search advertising, and LinkedIn. Microsoft's ticker symbol is MSFT. Microsoft's current market cap is $1.9 trillion. So it's one of the bigger companies out there. Their current price is sitting at $252, which is closer to the 52-week high. Which is not to say that Microsoft is not a great business. A lot of winning companies just keep on winning and their stocks keep going up. So don't be afraid just because the company's stock price is at its all-time high right now. As far as dividend is concerned, their forward annual dividend yield is 0.89%, and their trailing annual dividend yield was 0.87%. Their trailing PE is 34.4. Their forward PE is 30.77. Their price earnings growth ratio is 2.50. Price to sales is 12.04. Price to book is 14.14. They have a very healthy profit margin at 35%, and their return on assets is 13.51%. Let's look at their income statement. Their net income has only been going up from one year to the next. In fiscal year 2020, their net income was $44 billion, and that's only been increasing year over year. The total revenue has also been on the upward trajectory, as has their operating income. So their operating income has been going up. In the most recent year, it was $52 billion, and their net income was about $44 billion. They also have a very healthy balance sheet. As you can see, their assets have only been growing. In fiscal year 2020, their assets were worth $301 billion. Their liabilities have been largely flat at $183 billion in the most recent year. And their debt to asset ratio, as a result, because their assets have been growing, their debt to asset ratio has gone down, which is very, very healthy. You can see that their operating cash flow is also increasing, which is a very strong sign. If we look at their analyst ratings, based on 38 analyst ratings, Microsoft is a buy. 45% recommend Microsoft as a strong buy, 45% recommend it as a buy, and about 10% recommend it as a hold. Nobody is recommending a sell for Microsoft. The average analyst price target is $276, which is a premium over the current price of $252. So going just by the analyst reports and the price targets, Microsoft should be a buy. But I think Microsoft is going to go way higher than that in the next 2 to 5 years. And I think 400 as a price target is very much likely. Let's take a look at Alphabet, which owns Google. Ticker symbol GOOG. It's mostly known for its search product, which is its flagship product, but Alphabet makes a bunch of other products as well. Within the search and explore category, they're known for Google Search, Chrome, Google Maps and Waze, and Google Translate. Within the watch and play category, they're known for YouTube, YouTube Music, YouTube Kids, YouTube TV, YouTube VR, and products like Chromecast and Google TV. Within the Use Anywhere category, they're known for their Chromebook smart devices that run Chrome OS, Android OS, Wear OS, and Android Auto products. Within the Grow Your Business category, they're known for AdSense, AdWords or Google Ads, Analytics, and Google My Business. Within the Work Smarter category, they're known for Google Drive, Google Docs, Google Slides, Google Sheets. And this is where they're competing with companies like Dropbox. Within the Talk and Text category, they're known for Gmail, Google Meet, Google Messages, Google Chat, and Google Duo. Within the Stay Organized category, they're known for Google Photos, Google Calendar, Contacts, and Keep. Alphabet also has a consumer electronics arm, and they make a bunch of devices. In this category, they're known for Google Home, their smart speaker, the Pixel phone and line of products, Pixel Buds, etc., the Pixel Book, Google Nest and Google Connected Home, which makes products like smart thermostats and smoke alarms for the smart home, and Google Nest Wi-Fi. They also make a bunch of other products like Google News, Google Finance, Google Earth and Google Street View, Google Play and Google Play Books, Google Fit through their acquisition of Fitbit, Google Podcasts, Stadia for gaming, Google Shopping, Google Lens, Google Flights, Groups, Google Pay, Google Fi, which offers phone plans, Google Classroom for teachers. For business, they offer products like AdMob and Google Marketing Platform, Google Maps Platform, Google Cloud, Google Assistant, Google Waze, Chrome Enterprise, Google Trends, Google Tag Manager, and Google Surveys, among others. They also have products for developers like Firebase and TensorFlow, which is their AI platform, and Flutter for mobile development. Alphabet also owns and operates X, which is their moonshot factory, which works on breakthrough technologies. They are mostly known for Waymo and Loon. Waymo is their self-driving car project, which reduces traffic deaths and makes mobility easier and more affordable for everybody. Loon creates balloons that travel to the edge of space and provide internet connectivity to underserved communities and reduce spotty internet coverage. The Mineral project uses AI, sensors, robotics to understand plant life and the plant world and grow food more sustainably. The Tidal project is focused on ocean conservation, and it uses underwater cameras to support ocean life. The Everyday Robots project uses robotics to solve everyday problems. Alphabet also owns Boston Dynamics, which is a robotics company. The Terra project uses wireless optics and beams of light to bring high-speed internet connectivity to communities that are underconnected. That could involve as many as 4 billion people. The Wing project uses autonomous delivery drones and has created an unmanned traffic management platform to avoid obstacles and manned and unmanned aircraft and objects. The Verily project is focused on life sciences, and it creates miniature sensors, wearable devices, and so on to treat diseases and improve our health. The Glass Enterprise Edition project takes Google Glass to a next level and brings hands-free wearable computing to enterprises. This could have applications in manufacturing, surgery, and so on. The Makani project uses energy kites to harness energy from the wind. The Malta project uses renewable energy storage technology and stores electricity as heat in tanks of molten salt and as cold in tanks of chilled liquid. The Foghorn project helps reduce carbon emissions by pulling carbon and hydrogen out of seawater and combining it to create a carbon-neutral fuel. The Dandelion project uses geothermal energy to heat and cool homes in a renewable way. Brain, or Google Brain, uses artificial intelligence and machine learning for everyday products. The Chronicle project uses cybersecurity intelligence and analytics and helps enterprises understand their security-related data so they can avert security threats. Besides this, X is also working on several other moonshot projects to bring disruptive technologies to the world. Overall, Alphabet is operating in a ton of different markets, and they're constantly expanding into new markets. Alphabet has a current market cap of $1.6 trillion, and is one of the larger companies out there. It's currently trading at $2,399. If we look at the 52-week range, Alphabet's 52-week low was $1,699, and its 52-week high was $2,452. It's currently trading close to its 52-week highs, but Alphabet is going to continue to deliver strong results in my opinion, and the price should not scare you. They do not currently offer a dividend. Their trailing PE ratio is 32.12, Their forward PE is 31.45. Their price earnings growth ratio is 1.47 for 5 years. Price to sales is 8.95. Price to book is 7.02. They have a very healthy profit margin, albeit not as high as Microsoft's, but it's a profit margin of 26%. Their return on assets is 10.34%. Let's look at Alphabet's financials. Their revenue has been steadily increasing from one year to the next. In the most recent fiscal year of 2020, their revenue was $182 billion, which was a 12% increase from one year to the next. Although the rate of revenue increase has been going down, Alphabet is still a strong business. Their operating income has also been going up from one year to the next, and it was $41 billion in the most recent fiscal year. Their net income was $40 billion in the most recent fiscal year. Net income has gone up 17% year over year. They have a very strong balance sheet, and their assets have only been increasing from one year to the next. They currently are sitting at $319 billion in assets. Their total liabilities have also been going up, and they're currently at $97 billion in liabilities. Their debt to asset ratio has been going up, but it's not crazy, and a 30% debt to asset ratio is not too bad. They have strong operating cash flow as well, of $65 billion in the most recent year, and this was a 19% increase year over year. If we look at the analyst ratings, based on 11 analyst reports, Google is a buy. 45% of them recommend it as a strong buy, and 54% recommend it as a buy. None of the analysts recommend Alphabet as a hold, underperform, or sell, which is a very good sign. Alphabet is currently trading at $2,400, and the average analyst price target is about $2,540, so there's a slight upside. That said, Alphabet is going to continue to deliver strong results, and I believe we're going to easily see 3,000 or even 4,000 in the next 5 years. Let's take a look at Pinterest, ticker symbol PINS. Pinterest is a visual search engine that helps you find and collect inspiring ideas. It allows you to save ideas from around the web with one click or tap with its browser buttons and apps for iOS and Android. Pinterest Lens uses visual AI to identify things that you take pictures of and find relevant pins and ideas. Their ad platform is unique and scalable, and it's centered around interests, and it's built for shopping. The majority of searches on the platform are unbranded, which presents a really good opportunity for new brands to use Pinterest to quickly expand their reach and run effective targeted advertising campaigns that will lead to more sales. Pinterest currently has a market cap of $43.3 billion. The price is sitting around $62. Their 52-week low was 15.82, and their 52-week high was 89.90. Pinterest has sold off quite a bit after it saw its 52-week highs. Its trailing PE is 228.94, and its forward PE is 75.76. It does not have a PEG ratio. Price to sales is 21.81. Price to book is 18.61. If you look at their dividends, Pinterest does not currently offer a dividend. Pinterest is not yet profitable, and so they have a negative 0.46% profit margin. Although their GAAP losses are shrinking really fast and they could become profitable very soon. Their return on assets is 1.76%. Let's take a look at their financials and their income statement. Their total revenue has been growing year over year, with the revenue being $1.69 billion in fiscal year 2020. Their operating income, after taking quite a dip in 2019, has come back strong in fiscal year 2020, as has their net income. They have a pretty healthy balance sheet. Their total assets have been increasing year over year, with total assets being $2.61 billion in the most recent fiscal year. Their liabilities have been largely flat. As a result, their debt to asset ratio has been shrinking, and it currently sits at 14%, which is pretty low. Their operating cash flow is also pretty healthy, and it came in at $28.83 million, which was a 4,000% year over year increase compared to 2019. Let's look at the analyst ratings. Pinterest is currently a buy based on 29 analyst ratings, with 20% recommending it as a strong buy, 41% recommending it as a buy, 34% recommending it as a hold, and 3% recommending it as an underperform. The average analyst price target is 86.88. And based on the current price of 61.83, there is quite a bit of upside going just by the analyst ratings. However, I believe that Pinterest could far exceed these levels, and it could become the next social media giant. After extraordinary growth last year caused by shelter in place, with people spending more time at home and online, Pinterest's monthly active users came in at 478 million, which was slightly below the consensus of 480.5 million. However, it was still up 30% year over year. The company gave modest user growth guidance, and now they expect a relatively small increase of monthly active users in the US in the second quarter. As a result, the stock is down significantly after their earnings, even though they reported decent Q1 results. I think the market has overreacted to this announcement, and Pinterest has several catalysts working in its favor. The business fundamentals remain as strong as ever. They will offset conservative user growth guidance by significantly driving its revenues during the quarter. They will also benefit from a growing e-commerce market, which will help the company attract new advertisers to its platform. The strong revenue growth combined with expanding profit margins should provide a double boost in earnings going forward in the years to come. Pinterest has enormous room to continue increasing monetization, both revenue and margins in the future. Their losses are also shrinking. Its GAAP net loss went from negative 141 million a year ago to a GAAP net loss of only 21.7 million in Q1 2021. Overall, I think Pinterest is a stock you definitely want to have in your portfolio. So there you have it. Those are my top 4 stocks for the month of May 2021. I know this video is called the top stocks to buy for this month, but this list is a result of my own research, and that definitely does not guarantee that these stocks will perform well in the short term. However, I'm quite certain that in the long term, these stocks will do quite well. For the most part, I am a long-term investor, though every now and then I will take a short-term position. I believe that time in the market beats timing the market. With most stocks I buy, I like to hold them for at least a year, if not longer. Not only is that more tax efficient, but it's also time efficient. So I'm not spending hours watching the market like a hawk, which is a fool's errand anyway, and I'm not losing sleep. I prefer most of my portfolio to be high conviction buys, that is high quality stocks with strong fundamentals that should perform strongly in the next decade. That said, please do your own research and trade according to your own risk tolerance and use your own judgment. You definitely shouldn't view this list of stocks as recommendations or financial advice. I'm not a financial advisor, and this video is just for entertainment purposes only. Just because a stock is in this video does not mean that you should go out there and buy it. I'd say dedicate at least an hour to research each stock you're interested in, and then proceed to make your own decision about whether or not you want to invest in it. Also, some of the companies on this list are definitely riskier than others, and some are safer. But please do your own research and trade according to your own risk tolerance and your own judgment, because only you can make the right call to see if it's a stock worth investing in. If there's a stock you would like me to analyze, leave a comment down below and I may cover it in a future video. I wish all you guys a great year of investing.
$1 million.
So with that said, you guys, thank you so much for watching. I really appreciate it. As always, be sure to destroy the like button, the subscribe button, and the notification bell. Thank you so much, and until next time.